This right here is my top step from last week. As you can see, I made $1,500 from 50,700 to 52. And in this video, I'm going to be going over all the trades, the logic I use, and what I think is coming next, because we got a really strong week coming up. So let's get straight into the charts. So first trade, we start, okay, what are we anticipating? We are anticipating a 4-hour bearish bank block to be formed. But to do that, we must sweep bullish liquidity. And I learned to look for this when I was backtesting past crashes. And every single time, what we get is a fake bearish move and a move up that sweeps a high that like throws out retail, because retail went short here, right? And then they're out. So now the real crash can begin. And the exact same thing was what I was anticipating. We get this pattern here, breakdown below. Okay, retail are now short. Where are their stops? Internal range high, 4-hour. Sweep that. Retail are out. We are now ready for the real fall. So coming in Monday, I was expecting this. With the bias now clear, I can start to look at entries. Now, my entry that I was eyeing was actually in the New York Open. I was hoping to see some kind of inducement here, where 9:30 Open would go like above, then below, and then the run would come. That would be A plus setup, something around there. That didn't come. Instead, it ran straight at 9:30. And I think this is something that probably is for days when we're in a hurry or weeks when we're in a hurry. It will use the 9:30 opening liquidity to cause a real big move. Um, with that said, we then go up, we break this high. What will we want to do? We will want to dance a bit in this breaker again. Um, which one did I draw? I think I drew out this one. After we break this high, we should not want to break that low, because smart money went short in there. Um, here's logic. They go short there. Oh, they're wrong. Okay, because we go higher. Okay, we're not gonna want to take out big losses, right? So and run there. We're gonna go back into it and fill up our positions again. So in this range here, I was looking at entry. What we got is a 15-second bank block. Unfortunately, the data is not good enough. I have the best subscription, but for 15-second, I can't show you that. So you just have to take my word for it. This was my trade, um, and I held it, but I got stopped out right there. Now, what I learned from that being stopped out there is to be very careful to not just pick out a small piece of the move. What I was eyeing was like, okay, this is the last piece of the bank block, so it should not break that one. But that was very stupid, because that was not the move that had the liquidity. Rather, it was the whole fake move down, right? It very clearly bounced in this one, working a lot there. Um, and so what I should have done is move my stop to below this red line, and you can see how beautifully this one is respected. The equilibrium, that's what you want to see respected, and then the run continue towards what was our draw for the day, up there. So definitely something I learned there, to be very careful on, okay, what is the whole bank block we are working with. Don't move your stop too rapidly. Instead, look for new entries within that new bank block. So that was Monday. Move ended up taking the liquidity we wanted just by the PM session, and then it went into a seek and destroy program. Very interesting. Seek and destroy program. after we sweep the daily target. Let's see if we can find a pattern. Next, so for for the next day, I was slightly uncertain here, which really sucked because I would have positioned myself for my swing position way better. Um, but I still got in around here on my swing on my other like my real money account besides the Top Step one. Anyways, what I was looking at is, are we going to want to sweep this 4-hour high before we fall? Now, I think, are we going to sweep the other 4-hour high? No. I think in times when we are in a hurry, we are going to sweep the bare minimum liquidity that we need and then accelerate. Now, ahead of this, let me go to the 1 minute. We get this as our 9:30 opening. I was like, okay, um, boom, retail going short right there. I mean, I didn't take here because I was uncertain about the bias. You know, can't trade when you're uncertain about the bias. Then you could. That's the game. It really is. I was thinking, okay, if we are bearish, we're gonna violate down here. If we're bullish, we're gonna go up first, then down, and then up. Now, we get this down move first. That just immediately shifts my bias more bearishly, still uncertain. But we don't sweep these highs there. And then I was, which made me like, whoa, what? Like that's stupid, but okay. Um, but then we continue to fall. But if we did get this one, that sweep, I think that's a solid trade. Work with this one there. Maybe we have some kind of breaker here as well. Which one did we use? Which one did the banks use? This one looks very strong. Did we sweep that one? Yeah. Let's see if we danced with this. So go down. Probably on the 5 minute. It's cleaner. Top 0.05 equilibrium. Yeah, I think this one. But then we violated. So yeah, I don't know. I'll go do a deeper analysis on that later. But well, anyways, we go down and we break these lows as well. And now like, okay, if we were bullish, we definitely wouldn't go this deep. Probably we only had to sweep this one, and now the real crash has started. So with that in mind, I start looking for bearish entry opportunities. Drop to the 15-second chart. And what I find is this little break of that low there. Now, I was probably even on the 5-second chart here, but we get this break of a low, and then we sweep some internal 5-second highs, and because I'm so bearish, it still becomes a good entry. Um, it's not gonna violate that, even if it's a 5-second. If we are in a sell program, it is a valid bank block entry. And so I take that entry, and yeah, I just hold that, and that was my best day of the week, where I went from 50,968 to 51,842. And yeah, I only trade micros with this account. I'm gonna do a separate account very soon where I trade bigger sizing, but initially at the stage I am psychologically, I trade with micros, and it's very very fascinating because I know it's just because I've hedged this account to like be tiny trades, and if I did a account where I just trade with big sizes from the start, I would be a lot more chill. But it's like yeah, I've gradually taken this one up, and now if I just big size and fuck up one trade, then I'm screwed with that one account. And so I'm just gonna focus, get this one first one funded, um, and then start getting more funded with bigger sizes because it definitely goes faster. Then. Here's something interesting. Remember this old one we referred to before? Look at that. We get this break here. Look at the 5 minute. Look at that. So close below, come tap up again, fall. That could be another uh, entry. Something else I really want to point out that I learned this week is the time-based liquidity pools. The 930 unswept 930 lows are so strong liquidity pools, um, and they will pause very many sell programs and cause a liquidity sweep or something in the reverse direction, making them very good exit points as well. Mm, I, if I remember correctly, I did not hold this entire one. I don't think, because I mean, my biggest weakness is definitely mental, but I'm working it up. But probably sold somewhere around there. Um, but yeah, very happy about that trade. I mean, it's a very beautiful trade. Once you know the bias, you find those bank blocks, and we're in the sell program. It's just gonna keep on running. Um, so very good trade. Could have done it even better for sure, and I'm working towards that. Next, still bearish bias. Where do I believe we are drawing towards? That low right there. And I'll go into this in more detail later, what I think is happening. But that low there, because that is the breaker low, is also big liquidity pool where we've been working a lot with before. So we look at that. Okay, we're still bearish. What do we get? Today we actually get this thing that I like, which is the 930 fake move. So boom, breakout. Okay, shit. Everybody goes like, okay, we're cooked. We're short. Um, put put their stops up there. Retail. What do? We go up. We sweep that high. Very nice. What do we also leave here? Even more double bottom. Are we gonna leave that? Well, depends if we're bullish, but we know we're bearish, or we are highly confident of that. So we don't. This becomes the bank block. Why? Because on 1 minute you get this break below that internal low. Retail goes short, and this whole move up here. Sorry, should be like that. So retail goes short. This whole move up here stops. Um, price comes back down, violates that low. Uh, the logic is up here is where the banks took take their entry. They engineer liquidity, stops up there, and then we come back down and we validate this. When we take that low out, okay, that's our validation. We're not gonna go above this high again if we are in a sell program. I felt it was a bit too big of a risk reward out, so I started looking at the 15-second entry opportunities, and I learned that from, I don't know, I probably taking too big of a loss sometime, and just realizing, okay, price is fractal. I can just look at lower time frames. Um, and what you get there is still nothing very good, but you have this BPR area. So that's a area where you can anticipate a reversal. Let me see, by the way, if we have any fractals here. Yeah, we do, but we don't really work with them. I like fractals more when it's very clear, like we worked with them before. Like maybe, yeah, whatever. Anyways, this one here comes another bank block within the bank block, and now I'm like, okay, we get this reaction after we move perfectly and respect the BPR. Okay, it's very, very unlikely we're not gonna fall. So I'm definitely not the best risk reward, and I sized accordingly. But yeah, then I took half my trade off there, and then like the second half I put my stop above there, saying, okay, this is a order block. Why would we want to take out our own stops? Well, it was because it wanted to tap into this bank block again. Hey, can't win every time. But that yielded me a from 51,842 to 52,171. That was a 2 micros trade. Thursday and Friday, I did not trade. Thursday was just seek and destroy, really. I think, right? I didn't. No, I didn't. Yeah, so Thursday, seek and destroy. Nothing really besides the London, but didn't trade that. So what I felt here was still I was bearish, but we had now swept this major low, which, uh, well, I had in the back of my mind, okay, usually we then wanna do what? Go back to the equilibrium of the breaker. And I learned this as well from backtesting past crashes. And usually what tends to happen is price has this little breaker or order block that it dances with a lot before, right? And what I mean by this is look how much it dances in the quarters of this one. Clear respect of 0.25, clear respect of 0.25, like, yeah, it slightly goes below. Maybe it was the equilibrium it was working with. Comes back down, another tap, equilibrium, comes back up, boom, break it. What tends to happen in past crashes, we come back down to the equilibrium of that breaker block. What have we done here? Dance within it, respect, respect, respect. Look at the accuracy of these taps, it's ridiculous. I wish I learned this before. It took me years to learn this. Tap, 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 0.75, 0.25, equilibrium. What you're looking for is here, I'm still figuring out how to know which one it's going to go to. But what you're looking for is a breaker that's got a lot of respect, because it's very clear its orders within it then. Like people went long in these, they don't want to lose. So price comes back up to the equilibrium of it. And this aligns beautifully with all this liquidity that was built up just about it. So my prediction is we ended last week with this big reversal. Everybody's now, okay, it was just a fake out. We're chill. But what I think is going to happen is we are going to continue to fall down. The ES, slightly trickier. Um, it's not been building up the liquidity as cleanly, but something it has done is respect the equilibrium of its bank block very, very clearly, which I think is some kind of communication for us, you know? That's what I think. And definitely we'll see what happens. I couldn't really find one bank block that was as clearly like dancing with us. I mean, maybe this one, but it's not, the other one had even more taps in equilibrium. So this one, Might be that one. It probably is. Yeah, probably is. Something I should look at is these breakers. Does it come off the close below that retracement? What tends to happen there? Close below. For the 2022 crash, what happened? No. So this one came with no daily close below. Yeah, I tend to not really like that. 2022, which was the breaker we were working with here though. So what I'm looking for is there one that we were dancing with? Honestly, it looks like it's this one, right? There's none here that he was clearly dancing with, making this a invalid experiment, friend. I don't know. Mm, maybe it's a weekly, this one. So he is dancing with that one on the weekly. Let me see, can we study kind of standard deviation from this one? Hmm. The one I've taken here is this, but it's the 4x. So that's the lower time frame one. That's the weekly one. That's interesting. For this one, can we take some sort of standard deviation? Yes, we do get a reversal there as well, which is very interesting, I must say. That could speak for uh, the next support zone should come around here, aligning with this piece of liquidity. Then we get some kind of retracement, tapping into a what? This one. So we dance with that one. This one, was it? We dance with this one. It's not as clean, definitely. So now it's just me backtesting. I mean, you can definitely chill if you want. Yeah, this one we danced a lot with on the higher time frame. 0.05, 05, 05, 0.75, definitely. So maybe what we want to look at is you can probably put on 2 times speed here. It'll be even more useful. So we look at, okay, which is the other one is dance with after this one, which I would assume should be this. Did we? Oh, look at that. So then we, okay, so probably we fall back down after this one into this retracement, back up into this one, which is the next one we have been dancing with. Uh, and I'd say that because of this 0.751. Uh, and then it goes, okay, and then it goes, okay, now we've danced with this one. Now we're ready to break lower, and then we're gonna come and dance with the next one. And every single time here, it just is refilling its trades pretty much. Its liquidity. And so we just keep finding, okay, what's the next one? So this one was dancing with. It's quite a puzzle, isn't it? Because how do you determine which one to draw it from? But yeah, the art of breakers is very, very fascinating. Definitely something I recommend backtesting. We can do it right now, even. So let's see. This is clearly a market maker buy model here, from this high up to this low. So what I would then be looking at is, okay, which areas on the sell side were used as a bearish block that we can anticipate should act as support on the other. So firstly, this one very, very much stands out to me. Why? First off, is 931, most volume in that one. Secondly, looking at it here, I see very, very much. Also, by the way, oh, I wanted to mention that low. I think there was one low that got a beautiful retrace back into it. Let me see if I can find it. It was like right. What was it? Yeah, it was that one. Um, very clearly, because I was like, okay, why are we going so high in this one? But look at the precision of how it wants to refill its position one last time in the higher time frame bank block, and then we continue to fall. So definitely want to keep those up. But besides any aligns with the 0.25 of that one. After that, let's see the 50-minute, what happens. Come back down, clear respect equilibrium, clear respect equilibrium. I mean, come on, this is not a joke. Close below, respect those with the bodies. I think equilibrium is the most important one. Anyways, we know it's a lot of support here, basically. Break that one. Okay, what do we anticipate? Support within. If we are bullish, should we break this bank block? No. Do we get any interesting dancing in this one? Yeah, very, very, very interesting. This is like the break of our bank block. Determine, okay, we're looking for bullish bias. Um, and then we look, okay, what should we not break? Well, this one, I would say. And then this one, which was basically New York order accumulation. Did we get a standard deviation from this one? Oh, fucking LA. Oh, come on! Can keep making it so beautiful. God, this goes so deep. It's ridiculous. It's so sexy. So that's something I've realized, like the order accumulation of the ahead of the New York session. That can help you determine the bias of the New York, or like the final touch of New York. Order accumulation of the London session. So like the one that is before. I guess it would be this one then. Can determine. Should be looking at for London. I don't think that's the right one. Let's see. So that's one in New York. Yeah. So that's like your target for the London. Starts at 130. Does it? So London order accumulation starts at 130, and then it continues over across the London. Like basically look at, okay, in what parts of this one is it buying? Okay, here it's buying their trades. Okay, and boom, there we go. Okay, So where have they accumulated their position ahead of the London? Is there. Okay, so that's our uh, standard deviation. Where have they accumulated their positions ahead of the New York? Okay, right here. So that's our standard deviation. So beautiful. Jesus Christ. Let's see if we can find that even more. Where have they accumulated their positions ahead of the New York? I mean, honestly, this entire thing, I guess this one maybe, if we are to draw it like that, and we do get that retrace. But here, this is one of those days where you have to know, okay, we are probably, it's a trend day, pretty much. That's what I'm trying to say. It's gonna be a trend day, and so that first standard deviation is not likely to hold. Let's see if we got to the second one. Nah, nothing really. I would say we accumulate positions the entire like session here, didn't we? I don't know. Not the best example, I would say. Let's see. You can backtest this. Basically, find the times where they accumulate the positions ahead of the session. Take the standard deviation because that is nasty. I mean, you cannot say anything else. But yeah, you could definitely find the trader. I think two main takeaways from this video is study the breakers and the quarters, and within these you can start looking for the bank blocks to form and do it from the higher time frame to the lower time frame. So like let's say I was looking at, okay, I'm bullish here, my we get this tap in the 0.75, we're not allowed to go lower here, and we get this inverse for value gap, okay. Or more according to my strategy, we get this bank block here, which I can see is a like 15-second one, but let's drop high, low, high, low. So we take out that low. Clear. Also, you can see clear respect of the equilibrium of that bank block, probably even the 0.25. Oh, fuck. I don't show it. Yeah, but you can see. Tap. Wow. Beautiful, beautiful backtesting session. Backtest session today. I'm really, really happy about this one. I'm gonna try to number down, simplify into step by step. But yeah, I think I'm gonna end the video there. Wish me luck. Hopefully next week we get funded, and yeah, hopefully it doesn't reverse because my swing position is bearish right now, definitely. What I anticipate probably something that's likely. I mean, come back up, sweep this high, and then we should fall. Uh, Weekly bias down there. Genuinely, that is my weekly bias. So yeah, I love this game. Thank you so much for if you watched this far. I really hope it was a bang with a lot of info today. I think it was one of my best value videos, and I wish you all the best. Peace.